Hello fellow investors, welcome to Nordic Finance, and today for the first time ever you're seeing our beautiful faces, hopefully if everything goes to plan.
Hello.
This is, sorry, say hi Marcus.
Hello. Again.
So I am Lucas, nice to meet you, and my friend here is...
I would be Marcus, so I'm the other
Yeah.
part of Nordic Finance.
And we're gonna start using cameras from now on so you'll be able to see us.
Do remember that we are testing things out. For instance, I'm currently actually recording with my phone, and in the future I probably are going to upgrade and buy some sort of webcam instead. So we are testing things out. We are not entirely sure how this is going to work, but please let us know what you think about it in the comments down below.
Yeah, that would be helpful,
Yeah.
so that we know if there's something you want to see us change. Okay, but without further ado, let us dive into today's video, which you've seen from the title, how to profit from a stock market crash for beginners. What we're gonna try to do is that we're gonna really treat this concept, we're gonna first treat this at a concept level, and then we're gonna try to break it down and really show you what it means in practice, what you can do and how you can think. And it's important to remember that this is what we like to do, or what we are currently doing now when the market has been a bit shaky lately, and we do not yet have a lot of experience. What do we have now? About 4 or 5 months in total?
I was just gonna say that what is important to remember is that these are our views on it, and also that we started our investment journey pretty much when the COVID-19 pandemic began. So take everything that we say with like a grain of salt, because we are not entirely sure that all of this works, but this is what we have heard and what we are currently using, and we are quite confident that you at least can get something out of this.
Yeah, these are not our original ideas, so which in this case is actually a good thing.
Yeah, definitely.
They come from people with more experience
than ourselves. But I mean, we have, I think, put a few touches here and there that are maybe our own.
Absolutely.
So if you do find something helpful in this video, maybe you are a beginner that is starting to invest. So then if you find this helpful, remember to invest in the like button and deposit a subscribe. We'd really appreciate that.
Yes, let's get into it. We're gonna start this whole video off with the very famous statement from Warren Buffett, which is, of course, we've said it before on the channel: be greedy when others are fearful, and fearful when others are greedy. However, with a caveat, Marcus.
Yeah, I actually heard today from Meet Kevin, another very big financial YouTuber, and he actually put it like this: instead, you should try to think of this statement like from yourself. So actually, you should think more like, if I am fearful, maybe I should invest something, and if I am greedy, maybe I should invest less, in a sense, because you shouldn't think of yourself as a separate entity, because it's more likely that from the statement that Lucas said, that you are among the others, so to speak. So I'm not entirely sure if I'm putting this correctly. Maybe you can clarify a little bit, Lucas.
Yeah, so I think what Marcus is trying to say is that remember that if others are fearful, you're probably going to be fearful as well, and vice versa.
Yeah, and that carries along a lot of ways, because especially like in this market we are dealing with right now, I think that we have a lot of new investors, like ourselves for that matter, that are entering the system now and are investing, and maybe a few of us actually have the issue that we think that, like, yeah, everyone is fearful, the prices are dropping, and that might lead us to actually invest too much, because we follow this concept to the very core, like be greedy when others are fearful. But are everyone fearful now? Because a lot of people think like this is a good time to invest, and it could very well be, but we should also be aware that I think more so maybe than usual people are thinking like this right now, because this is such a well-known concept that you should invest when others are fearful. So it might not actually hold entirely true right now, but that's a whole other can of worms, which I think we shouldn't really unpack in this video.
But so this is the concept here. It's the first part of our investment strategy for market crashes or market corrections when the market is down. The other part, which is equally important, is that at a core level, we are long-term investors, which means that we invest in tomorrow because we believe that tomorrow is probably going to be more profitable than today.
But if I could maybe put those two together, like those 2 points is, so I think that what we should say is that basically when others are fearful, it could be a good time to invest into tomorrow, so to speak, because I think that was a little bit like almost left out. So that basically, when it's a good concept that when others are fearful, you should invest, and I think that carries especially true if you are planning on holding things long term, because it's just like Lucas said, what you're trying maybe to do is invest into companies that are currently, because of fear, have lost a lot of their value, and your plan is basically to hold them for a much longer time to maybe ride out this downturn, so to speak. I mean, is that a good way maybe of putting the two together?
That's an excellent way of putting them together, and we're going to further clarify and do that in our next point, which is basically about keeping in mind that the stock market is not always based on reality. Very rarely it is. I think we've seen that with just a massive recovery it's had across the board since the first corona crash, because if you look around, things haven't really improved. Of course, tech companies do well, but to what the extent that we've seen, let's just say it's quite extensive how well it's recovered. Yeah, so this concept is from Intelligent Investing by Benjamin Graham, which of course was Warren Buffett's mentor, and he talks a lot about how irrational the stock market is, and especially during a crash, like market sentiment, market opinion is way down the tube, meaning that it also negatively affects, or if you're looking to buy, positively affects the stock prices, because fundamentally is in crashes, like many companies, some companies have definitely changed in like the situation we have today. We'll get more into that in just a sec. But a lot of companies, nothing has changed, but since the overall market sentiment is down low due to maybe a second corona wave being on the horizon, the US presidential elections, all of the companies get affected negatively.
Yeah, in some way or another.
Yeah, or from a stock market perspective, like from what they are valued at, which means that this might be a sale.
Yeah, because what is really important, and I actually read this in the newspaper today, is like one company, for instance, they specifically stated that we have not been affected by COVID-19, like whatsoever. Our business hasn't been affected at all by COVID-19. But I would still, I think that this company might not actually have been noted. It probably wasn't. But it's important to bear in mind that even if it were noted, I think that its stock price probably would have been affected at least temporarily from the COVID-19 pandemic, for instance, or another stock market crash for that matter, depending on what the stock market crash is. But in their case, for instance, they were not affected by the pandemic, but their price still would have dropped at least temporarily. So, and you could also see that when you looked in the market, like historically, almost all companies saw a massive downturn, like in March of this year, like 2020. But a few of them, like the companies that weren't so affected, they bounced almost right back because they weren't, their business weren't fundamentally that affected by COVID-19. A few of them even saw profits, like bigger profits during this time. So that's also, like Lucas said, very important to bear in mind that if you were one of those that really like knew how to use this, then you would have bought a lot of shares of different companies, like in March, because you could have made a killing at that specific time, because there was actually no real sense why these companies would drop as much as they did, because their business is not really affected by COVID, but everybody just got really afraid for some time.
Yeah, and it makes sense because we had no idea how bad this was going to get.
Yeah.
And we still, I would argue to some extent that we still don't.
No, definitely not. I mean, there are still a lot of, I think, good deals, so to speak, to be made from the fact that we live right now in a fearful environment where everybody's kind of fearful. They're playing their cards close to their heart, you know. So I think there's definitely some money to be made here in this type of market if you know what to do.
Yeah, because there's a lot of uncertainty, but that of course always means that you also have to be careful, because some markets are very negatively affected. For example, a lot of people talked very positively that the airlines could still recover, and they might still do, but I think a lot of people who were very early to jump on the airline bandwagon might be a little bit more shaky now, because this seems like it's going to stick around for quite some time.
Yeah, and that's not even necessarily because of like COVID. It's more like people are probably going to change how they, like, for instance, do business meetings and stuff like that. A lot of these are probably maybe going to be held by Zoom or something like that in the future. So it's not like the pandemic itself. It's gonna be what comes after. So I definitely agree with you on that. That a lot of people that bought into these airline companies might not have done so well.
Yeah, but that's maybe getting into speculative nature.
Yeah, but I just want to add one thing because of like an earlier point we said. So what you should basically think about when you're doing things like thinking about the stock market like this, that it's not maybe so like it doesn't reflect reality, so to speak, is like when we take our airline example, you should think about yourself. Do you think this might be a company that has a place in the future, and how will their business look into the future? I'm pretty sure that a few people saw that, well, maybe the pandemic is going to hit the airline companies hard now, but what's even worse is that it's going to hit them afterwards in the way that maybe our like whole society might change a little bit to more working from home. I'm sure that not all people could see like the full extent, but I'm pretty sure like a few could figure out that maybe airlines doesn't have like the place in the future that they used to have, if you see what I'm getting at.
Yeah, and on the reverse side of that, on the flip side, like companies like Zoom, companies that provide services that allow us to do these virtual meetings soared in price, because the same people at the same time people figure out that these companies just became the future, the near future, in a very real sense. So opportunity, risks, they come hand in hand.
Yeah, but you also, just to add to the Zoom thing, is that though a few people are now speculating in a way that if like the pandemic lets up, then maybe Zoom was actually a little bit overvalued because people jumped too much onto the hype train. So that's also like the flip side of it.
Absolutely. Yeah, so it's the flip side of the flip side.
Yeah, exactly.
But let's take a step back from the nitty-gritty and think more about the overall mindset again, because the point we're trying to make here is that overall market crashes mean a big price reduction, which also means that this is basically a sale
in a sense.
Even though sometimes there might be a reason why there might be a reason for the price reduction, as we've already said, but also in many cases there's not, and it might even be a reason to believe that these companies are going to do even better in the future, even though they are worth less, or the share prices are worth less at the moment.
Yeah, definitely.
So that definitely would suggest that if there's any good time to start buying, and I'm very against timing the market, but if you're already buying into the market, you should certainly not stop or start selling now. Now you should start buying even more. Even though I don't believe in timing the market, like I think you can buy more when it's down and buy less maybe when it's up or something like that. At least buy more when it's a crash, and especially when it's a big one. But again, always, as we've said, remember to be careful, and I think we've given you plenty of examples why that is important. And I started thinking, and the thing I have done so far, which I think is very good for people who are new to investing, again, for beginners to consider, because picking a good stock or a good company that's going to do well even in a crisis situation is going to be very, very hard. However, this might actually be a great time for index funds. Like now, this is more of my ideas now coming into the pictures, but if you think of a country as a whole, in a crisis, like all of the companies, just the general value is going to go down, but there's no reason to believe that all of the major companies as a whole in a country are going to stay down for the next 5 to 10 years just because of a crisis. But if you have a global crisis affecting all of the global companies, and you believe that things are going to get better, what that means is that everything is on a sale again, but also when you invest in an index fund, since you buy a small portion of so many different companies, you don't have to worry about one company like going bankrupt because you're buying like a share of all the big ones and some of the smaller ones. Do you, Marcus, get what I'm saying?
Yeah, definitely. I mean, I'm not too well versed myself into the index fund markets. I again want to get more into them, but haven't really done so yet. But I definitely see where you're coming from and what you're saying in this, and I think that for sure it might be the more safer alternative in a sense to do that instead of like trying to pick, like you said, timing the market and picking specific stocks that you want to time in that sense. So yeah, I definitely think that there's something that could be said to just like continue on with your index funds. But I mean, if you are committed to the index fund plan and like put in a certain amount of money anyway into your index funds each month, I mean, there's certainly no sense in stopping that right now.
Yeah, it might even be a good time to like
To raise
up
it,
a
yeah.
little bit. Yeah.
Yeah, definitely. If we're gonna talk about like the whole thinking about how to think when buying stocks, I think it's also important, like, or were you gonna say something else about the index funds?
No, I just wanted to show that they are there and in uncertain times they become even more valuable, I would say.
Yeah, okay, that's really good. Uh, the final point I think I have when thinking about when buying, in my case against stocks, because I have more experience with them, is that one mistake I did in the beginning, and this is also pertaining to the start of the Corona crash, is that what I did a very bad mistake of looking like old highs of the company when it was doing really good. I was looking like, well, this company was killing it back in 2018. If I can get anything like close to back to that after this crash, then I'll just earn a lot of money from that, because I'll just the company will recoup and I will get the difference from between the price I paid and what it will get back to. The problem is, if you can even a little bit see a trend that this company was declining perhaps before the stock market crash, that it was already doing like a little bit bad, then I would not put any money into these companies in general. At least that's my experience. Unless you have very strong indication that they might be undervalued all the same, even though they have done poorly just before the crash, I would not invest into these companies, because at least from the ones, and here I'm actually going from myself, the ones I invested in that I was looking at like old highs, so to speak, none of them have come close to they lost a lot of their value after the COVID-19 pandemic, and they have not recovered it, and I am not very confident even that they will get to the point where they will recover from like after the point they were at before the pandemic. I think they might even they're certainly not going to go back to the old high. I'm lucky if they go back to the price they were when I bought them, to be honest. So I would just be really mindful of looking like at, don't get caught in like historical trends and like old highs.
Yeah, and I think the video we did last time about really basic fundamental analysis of companies can be of great help here, because I guess that's something you didn't do.
Yeah, no, I didn't do that. I was just looking at like old highs.
Alright, so let us summarize the video. We've talked about how you can profit from a stock market crash and how to act in like some best practices according to us and the sources we've found.
Yeah, so we really want to emphasize that this is what we have gathered, because it's not like we are basing this whole video and also how we think in a market crash on other sources. So we're probably going to link a few of those down below. But this is like this whole concept of be fearful when others are greedy, and greedy when others are fearful. All this stuff. This is stuff that we have learned. Actually, only a little bit of it is our own thoughts. Like, for instance, don't look at old heights. I'd say that I actually learned that from experience. So that we really want to emphasize that this is how we think about it, and maybe you can get something out of it and use yourself to get some benefits out of this otherwise quite horrible situation.
So we talked about fear and greed. Remember that when the general vibe is fearful, it's probably a good time to start maybe being a bit greedy yourself and trying to pump a bit more money into the market, because in general it's going to mean good prices.
Yeah, it's almost like buying at a discount in a way, because otherwise other people want to sell their shares because of the fear, but you might now want to buy them because at a later time when the stock market eventually recovers, then you might sell them for a profit for even the initial price, and then maybe even some more than that at a better opportune moment, so to speak. And that even ties into our second point, that you should, of course, you should be a little bit optimistic about tomorrow. So you should really invest into companies. And this always is, of course, always true, but it's especially so, I think, in stock market crashes, is that you should invest into companies that you think can make it through this, and that you honestly believe that they have a place in the future, so to speak, and that they will be relevant, and hopefully they will, or you should think that these companies would be even more profitable than they were before the crash, because now you really can get them at a discount in that case.
Yeah, and this goes back to checking the fundamentals of the companies, and we've done a great video on that, the last video, and I'll link it in the description, where we go through the fundamentals of how to do an analysis and read through a company statement. So we actually do that in the video, and we show you on the screen how to do it, and some important things to look for, and I'm really happy with how that turned out. So if you want to get the basics, how you can find the information and what to look for, that's going to be in the description.
And just to add to that, like, one of the important parts to remember when you're checking the financial statement is also always remember, don't underestimate the overview and like what is the company doing, what have they been doing, and stuff like this. It's really good to look at the numbers, but it might be even better to look what is the company planning to do, what is their plan, stuff like this. It really has an effect. So remember that also. Well, don't just look how much debt are they carrying right now or stuff like that. That's really important, but you also want to know what is their strategy for the future.
Absolutely, yeah, and we cover all of that in that video, so I highly recommend you check it out. And then next point being, stock market is not reality. We also have a lot of shameless plugs, but we have a video on that as well, since we've been seeing the stock market lately just soaring to such highs, even though everything's just going crazy. So we covered that in that video. I'll link that as well. And this is really from, again, the intelligent investor, that think of the stock market as an irrational person who sometimes screams absolute insane prices and like insanely high prices, and sometimes insanely low prices. And then if he's shouting or she's shouting insanely low prices, you should probably buy some, and
sell them back to that person when they are shouting incredibly high prices. That's the way I'm gathering it.
Exactly, and that's of course like making it stupid simple, and it's a bit more complicated than that, but that's like the philosophy to keep in mind.
Yeah.
And that really leads us on to the last point, which is crash. When you hear the word market crash or market correction, a little switch should flip in your head, and you should kind of see this might be an opportunity, this might even be a sale.
I'm thinking just like of Game of Thrones, when the scene where Littlefinger says like chaos is a ladder, and that is kind of what you can see this in a way as. Remember, we are thinking purely from a financial standpoint here, like it's a horrible situation. But what you can do is you can actually get a lot of good deals in the general confusion and fear that is going on right now, if you know what to look for and what to buy, so to speak. So you can maybe find some light, at least in an otherwise quite horrible situation, I think.
Yeah, that's actually a really great thing to emphasize, and I'm sorry if I came across as what's the word?
Heartless bastard.
Yeah, something along those lines, but just like the situation in a crash is always really sad. It's like, I think it's really good. Like, I'll just tell this story. It's super short. In the Great Short, Big Short, we've talked about that before, the movie.
Yeah.
They are so happy, the guys who short the market, the two young guys in that movie. And then like the old veteran says, do you know what happens when a stock market crash? like for every percent that it goes down, for every percent increase in people who don't have a job, like this many people dies, and it really like hits home like that they are actually profiting on. It's not their fault that things are going to and it's of course good for them that they can profit on it, because like it's not
Yeah, but it's not something to be gloating about or something like that.
Yeah, it's not something to be happy. It's still a really sad event. Just like everything that's happening now is really sad.
Yeah.
But as you said, like this could be one of the only upsides, or one of the few upsides.
Yeah,
So
exactly. Might as well use it,
take
is the way I'm seeing it.
Okay, do you have anything more to add to this video?
No, I think we've covered it quite extensively. Like, of course, this is not an all-encompassing list or anything like that, but I really do hope that we provided you with some value today and what to think about, especially if you are a beginner, which this video is really aimed at. Like, if you're a pro and you probably if you went through like the 2008 crash and stuff like that, you probably know all of this. So good for you. But if you're a beginner, I really hope that maybe you can put a few of these tips into practice. Maybe you hadn't heard about a few of them. So I really wish you the best of luck in this otherwise like very horrible situation in that case.
Yeah, absolutely. And with that, I would just like to tell you to softly caress the like button and kiss that subscribe. And with making it really weird, I guess all that's left to say is goodbye.
Yeah, goodbye or happy investing.
Real quick. And happy investing. Have a great time until next week.
Yeah.